Got some good news on the Celsius front again, but also possibly some disturbing information. What is that? Well, we're going to talk about that on today's Frugal VC. What's up, guys? Welcome back to the channel, and thanks everyone for tuning into Frugal VC. Today we're going to be talking about the latest news with Celsius Network. I've been following this since I've done videos on Celsius. As you know, I have some money, some Bitcoin in Celsius, and it's really stuck there because last month they shut down withdrawals, and we've been following that really closely because there's been some really disturbing things going on. I had some questions about their practices and why this was becoming such an issue. I had some speculations and some information I uncovered, and actually confirms why that might be, or actually explains it, I should say. So we're going to talk about that today. Before we do that, if you wouldn't mind hitting that subscribe button, I'd appreciate that. Helps you stay up to date with all our videos on Celsius, Algorand, Townstar, Splinterlands, the game, all these crazy DeFi projects. As you know, the whole point of the channel is I try these things out. I don't just give you hype. I actually do them, and I let you know how it goes. But I don't hide the bad stuff either. I tell you the good, the bad, the ugly, and we mostly focus on Algorand just because it's been so good for us. Everything has worked well, but there's always some little problems there too. So we just don't sugarcoat it for you. Hit that like button too if you don't mind. That really helps the channel as well. And let's get into it. So the first I want to talk about this, came across this CoinDesk article from the 8th, and I think this really kind of it kind of gathers together all the stuff I've been researching this weekend. So there's some really good news in here. So if you're someone who has money on Celsius, this is the kind of stuff you want to read, and it's going to kind of explain why it's so important to pay off that debt. So let's just scroll down and start getting into it. So Celsius, liquidity-strapped crypto lender that this week paid down $223 million of loans on blockchain protocol Maker to free up $450 million in collateral, now might be trying a similar strategy with two other big decentralized finance platforms, Aave and Compound. So here's the thing. This is why having that liquidity collateral locked up, this is why it was such a big deal, because they were running low on liquidity. And by paying off the debts in smaller amounts, it gives them access to bigger amounts. In this case, $223 million of loans. By paying that back, it frees up $450 million in collateral, which might help solve their liquidity problems. And so they did that with Maker. They're going to do that with Aave and Compound, and that's basically what it talks about. And so we know this. Why do we know this? Because we can follow them on chain. We can see what their wallets are doing, and we can find out, just how much it's working off. So it says down here, should Celsius fully pay off the loans, the crypto lender will theoretically be able to reclaim about $950 million in assets that are pledged against the debt and are locked up as of now in DeFi protocols. So they owe right now, Celsius owes $235 million in stablecoins to Aave and Compound. It's collateralized by $950 million of various digital assets. So they get that back. So it's like you come up with the $235 million and you get your $950 million back. So that's big news. That's basically the gist of it. Celsius, helmed by CEO Alex Mashinsky, is reportedly working on restructuring experts from advisory firm Alvarez and Marshall, and hired banking giant Citigroup for advice on financing options. The company said June 30th that it was exploring options to preserve and protect assets. Such steps might include pursuing strategic transactions and restructuring liabilities. So a lot of this will help them reduce their debt, help them restructure. They're working with Citigroup. I guess that's a good sign. All this is good stuff, right? But this doesn't answer the question of how we got here, right? We can go in, there's more details if you want to check it out on CoinDesk. It was from the 8th. So this is like last week, like last Friday. But more importantly, I want to direct your attention to this right here. So this is a tweet storm from Jason. This is on the 7th from Jason Stone. And from August 2020 until April 2021, he led a group of the group of talented individuals, in his words, who managed the OXB1 address. So it's really important to point out this guy didn't work for Celsius, but he had his own firm that was, it sounded like it was acquired by Celsius. Well, I'll just read it. That'll be the easiest way. So I find this really interesting. This is really interesting because remember how I talked about in past videos, questioning why Celsius could have got itself into this position. And it seems strange to me that they didn't seem to think that Bitcoin would ever go this low, despite the fact that in every cycle, it's in the bear market, it's tended to, drop about 85% from its all-time high, which would put it, even at 100,000, had it gone to that 100,000 that a lot of people were expecting, that still would have been allowed for it to go down to 15,000. And again, not an exact science either. So just because it's not supposed to based on past events doesn't mean that it's going to. So this is really important to keep in mind. But anyway, let's read on. This will explain, I don't want to say I was right, but I was questioning this thing and this seems to lend credence to that. So let's get into it. Before leading OXB1, that's the wallet, I spent years in the proof of stake realm creating yield optimization strategies. In 2019, I founded a company called KeyFi that wrote MPC staking software and strategies. After discussing with the Celsius network in mid-2020, Celsius began an acquisition of KeyFi's assets and team. Therefore, I pivoted KeyFi to staking and deploying DeFi strategies for Celsius. So this one I don't quite understand because it almost makes it sound like they bought KeyFi, but then it kind of also makes it sound like KeyFi was a separate entity. So I'm a little confused about that. But the point is, this group KeyFi was basically staking and deploying DeFi for Celsius. So they were kind of handling that. In August 2020, OXB1 was created along with other addresses to send Celsius Network's customer deposits to us to manage. Shortly after, Celsius shared private keys to the addresses with us, and over the ensuing months, transferred hundreds of millions of dollars to customer deposits for us to invest. By the time Celsius and KeyFi parted ways, we were managing nearly $2 billion in assets. That's a lot. So let's keep that in mind because that's a lot of money. You want to be really careful with that, right? Celsius's risk management team monitored our investment strategies and performance using HedgeGuard and debank. So they were monitoring, which you'd expect. They assured me that as part of that monitoring, their trading teams were adequately hedging any potential impermanent loss from our activities and liquidity pools. They also assured me that they had risk management and hedging in place to account for fluctuations in token prices. Remember how I brought that up? That's a very important, this is a very important paragraph that if you guys have done any DeFi, you know that impermanent loss is part of any kind of liquidity pools. It's part of it. So, you do take that risk. If you create a pool and then one of the asset prices drops quite a bit, you will lose some coin. So you have to be mindful of that. And supposedly they were hedging against this, right? Well, but in late February 2021, we discovered Celsius had lied to us. They had not been hedging our activities, nor had they been hedging the fluctuations in crypto asset prices. The entire company's portfolio had naked exposure to the market. Whoa, there's the revelation. There's the thing we were talking about, right? This is what I was saying, is they didn't seem to be hedging against this. They just didn't. And remember how we talked about how Mashinsky didn't think the price would drop this low? You just can't think that. You have to plan for this stuff. And we talked about that in personal strategy. Whatever the price does, you should have a plan for it. So if the price of Bitcoin drops a lot, well, that's your buying time. That's your time to buy in more. That's your time to accumulate. And when it's high, when it's at all-time highs, you should probably be selling off a little bit. Now, this is not financial advice. I'm just telling you what I do and what's generally considered a good strategy. So keep that in mind. They were apparently not doing this, not doing any kind of hedging whatsoever. They just assumed, oh, Bitcoin's going to go up forever and it won't drop that much. I really don't understand the logic here. Again, now this is assuming he's telling the truth, but it fits the situation, right? So we think it's probably pretty likely this guy is telling the truth because that's pretty much what happened. I mean, they're illiquid now, right? After seeing these and other major problems in how the company operated, we informed Celsius that we wished to terminate our relationship. That was March 2021. We told Celsius that we would not work with them to unwind we told Celsius that we would work with them to unwind our various positions over the following months. By April 2021, the value of assets under management had increased by over 800 million. But when we unwound the DeFi position, Celsius suffered impermanent loss. At first, they believed the impermanent loss was evidence of KeFi stealing and accused me of being a thief. Again, if you guys are managing $2 billion, you ought to know what a permanent loss is, don't you think? Probably an important thing, I mean, to know. I mean, average investors know this. Retail investors understand this. I hope they understand this. They give you a little warning when you sign up for a DeFi thing. Hey, just so you know, impermanent loss can happen. They later came to accept the impermanent loss for what it was, but claimed I was responsible for it. They completely ignored the fact that they had full visibility into all trading strategies deployed by KeFi and promised to hedge that exact risk. I mean, where does that come from? They can see on chain what they're doing. I've tried for over a year to quietly settle this dispute with Celsius pursuant to the contract Celsius signed with KeFi. They owe KeFi a significant sum of money. They have been more than reasonable in attempting to resolve this with them. We have been more than reasonable. Despite our reasonableness, and due to what I believe was motivated by a massive hole in their balance sheet, Celsius has refused to acknowledge the truth or their failures in risk management and accounting. They've tried to deflect blame on me instead. And it kind of goes on. There's legal action. There's a lawsuit. Their filing is here. If you want to look at OX_B1, you can find their filings. You can actually read the filings filed in the state of New York against them. I think that's pretty interesting. So I guess the bottom line here is that we have some good news that Celsius apparently is finding their way out. They're working with some pretty prominent banking firms to help restructure. And hopefully that means those of us who have money locked on Celsius can get it back. And frankly, I recommend getting the hell out. Now, I personally, getting the heck out, getting the beep out, whatever. I'm definitely not going to be keeping my money on Celsius. If even a fraction of what that guy says is true, that's really irresponsible. And I have heard Wyszynski make those comments about the price of Bitcoin. And you just don't want your money in the hands of someone that irresponsible. So even if like what this guy is saying isn't true, we do have those comments. He has said that he didn't believe Bitcoin would go below whatever it was. I think it was like 40,000, which is nuts. It can always go. It could go to 1,000. We don't know. I think that's really unlikely, but nothing is impossible. So you can't think like that. You always have to hedge against risk. And if you take anything away from this, pay really careful attention to what these guys say. And if they say stuff that sounds wildly inappropriate, I would be really careful putting your money there. You know, Coinbase is probably the only decentralized platform I'm going to use anymore. I just don't trust any of the other ones. I'm not even sure I fully trust Coinbase, to be honest. I'm looking at, if I get my Bitcoin back, it's probably going to go in some kind of ledgers. The few percent yield isn't really worth it. If to do so, you have to put it at this kind of risk. And you know what? This is a lesson. This was a lesson for me. Big lesson for me, for sure. I learned that I have to be really careful with this kind of stuff, and I can be really careful where I put this. Unfortunately, it's not a huge amount of Bitcoin compared to my overall portfolio. It's a tiny loss if I don't get it back, but it's still a loss. So it's funny too. I keep getting the rewards. Those seem like a kick in the butt, maybe. All right. Well, guys, thanks so much for watching. I hope you got something out of it. Love to hear what you have to say about all this in the comments. Did you lose money with Celsius? Haven't really lost it yet, but possibly lost it, I should say. Yeah, leave a comment. I will try to respond. And thanks everyone for watching. We'll see you in the future.